All right. Hello, everybody. Super excited to have everybody here for our Meet the VC webinar. We do this series monthly. My name is Marley. I'm the Director of Business Development at Escalon Services and super excited to be here. We've got a few folks on the line. But before we get started with our conversation, I want to take a minute to thank our partners, Trinet. They're an amazing partner of ours at Escalon. Laura Ruth is on the line, and I will pass it over to her to give a quick introduction on herself and how Trinet is available to help founders at different stages.
Hi, everybody. Can't see you, but I guess you could see me. So nice to chat today. I'm Laura. I've been with Trinet for 4 years. If you don't know about Trinet, we help companies as soon as they have a few employees, so typically like 3 full-time employees up to a couple hundred. I'm guessing a lot of people on this call probably are on the smaller side looking for funding, which is what Mirit's going to talk to us all about. But things like payroll, remitting taxes, workers' compensation, employee health insurance that can be affordable as a small business, very difficult to do. But we basically take all of these items for you, wrap it into one place. So you don't have to hire a big HR team and you can just scale more efficiently and find top talent. So I'll put my information in the chat. That way we can all connect after this call. But really, if you're planning on getting funding, hiring, or you have any issues around benefits, payroll, HR, let's set some time to talk.
Awesome. Thanks so much, Laura. And we also have Robert from DECKO as our another partner. So, Robert, I will pass it over to you for a quick introduction.
Hey, okay, cool, awesome. Thanks, Marley. And
Yeah.
everyone, great to meet you. Yeah, I hope to meet some of you guys face to face instead of seeing your names in the participants point. But usually I like to do this by a quick show of hands of who's raising money, but I don't think we could do that through this. But the long and short of it is at DECKO, what we do is we help startups create world-class pitch decks by connecting them with the kind of people who'd actually be reviewing them. If you take a look at Series C, Series D companies, all of them have fancy investor relations teams or in-house corp dev teams, or even their VC funds are the ones who are handling the process of creating their materials and then getting those out to investors. Pre-seed, seed, Series A, Series B don't have those. And that's what we've brought to startups at DECKO. What we do is rather than just hiring a designer, which you could probably find on Upwork or something like that, instead what we do is we connect you with an active VC to create your deck content completely from scratch. So if you're an AI company, who better than an AI VC to be able to create your pitch deck content? Then from there, our designers then design everything and make it visually stunning. And so what you get on the other side of it is a fully customized pitch deck built from scratch by the kinds of people who'd be reviewing them. We've worked with just over 240 companies to date. They've raised from a bunch of the brand name VCs that I'm sure you've all heard of. And I'd love to, include you all in that as well. So I'm going to drop my information as well in the chat just so that everybody has it. And every founder that comes from Escalon actually does receive a 10% discount on everything that we do. So I'll drop my info, but from there, Mirit, I'll pass it over to you. I'm excited to hear everything.
Awesome. Thanks so much, Robert. And for those of you who are not familiar, Escalon is a one-stop shop for all of your back office needs. So we offer outsourced accounting, finance, HR, recruiting, everything that you need that you really don't have time to do as a busy founder, but need help. You need the support to do it. So if there's any services that you're interested in, happy to connect with everybody after this call. But let's get to the conversation that we're all so excited for. So Mirit, I'm very excited for this conversation. I know we have a lot to cover. We'll dive into LACONIA's investment thesis in a minute, but I'd really love for the audience to get to know you first. So let's just start maybe a little bit of your background and how you got into VC. I know it's not, the traditional path. You have a lot of experience as an operator, so would love for everyone to learn a little bit more about that.
Hi everyone. Hi Laura. Hi Robert. Hi Marley. Thanks for having me. And hello to everyone on the call that we can't see, but I know you're there. So I'm Mirit. I'm an investor at LACONIA, and I'll tell you a little bit about myself and then hopefully how I got into LACONIA. So I'm originally Israeli. I spent 8 years in London. And I've moved to New York City 2 weeks before shelter in place had started. So I had a perfect timing to be arriving into the city. My background is actually economics and law. I spent time in capital markets, and then I was in most of my career in growth and customer success roles in startups. My kind of main startup was Due Deal, where I was head of growth at customer success at a B2B fintech startup back in London. And I was really there at the kind of 1 million to 10 million in ARR. So I really saw how startup scales. And I think when I went into the world of startup and I saw how fast you can make an impact, how innovation moves at the speed of light, how capital flows to kind of fund different ideas, I became really kind of excited about this space. And I thought, what if we can use money and capital, but actually to solve other problems that I want to see solved in the world? And kind of I started my path into what people might call social impact investing, or really thinking about how can we kind of redistribute capital and move capital. So I helped build 51 Unicorn, which was an investment club aimed at female retail investors investing in other women. I then moved into Seed Impact, which was a social impact platform orchestrating investment opportunities between angel investors and social impact founders. And then, having done a fellowship in venture capital called Included VC, I then decided that I want to go into a full-time role at a fund. Now, LACONIA is not a social impact fund, but I do feel like I have found what I like to call intentional investors. So we are a generalist fund, and I'll tell about LACONIA in a second, but 50% of our investments are women, 50% of our investments are people of color, and then 30% are Latinx. And for me, when you compare it to any stats that I know about the world of venture capital, that's quite remarkable. So it drew me to LACONIA, and I knew them for a while before I was able to join, but a bunch of intentional and kind people who are really trying to make an impact in the world.
Yeah, that's amazing. And we'll talk a little bit too about what makes LACONIA special. I think even just looking on the website, the amount of transparency that's available around the process and how you guys think about investments is really, really unique and special. So we'll dive into that. I'm curious, what surprised you the most, Mirit, about making the shift from an operator into the other side, into venture?
It's funny. I was talking about it with my partner the other day. I think he was asking me, how much time do I think I spend with other VCs? And I think the answer is probably majority of my time. I think one of the things that I was really surprised to find out is how much time networking with other VCs I need to be doing, because we're trying to get deal flow. We're trying to make sure that we're seeing everything is out there. And I'm out there in events, and I'm out there in demo days, and we have inbound pitch forum where people can pitch us. But a lot of the deals, unfortunately, in this sector still get done by VCs talking to other VCs. If we are syndicating a deal and we know that there is an investor in our network that will be good for that deal, we're likely to put it in front of them and invite them in. And we would hope that other VCs would reciprocate the same. And obviously, getting inbound from a VC is the best form of getting a deal done if you trust that VC. So a lot of the time is spent with VCs. So I'm probably doing a coffee with a VC twice, if not 3 times a day.
Yeah, that makes sense. And I think we tend to think of, the dynamic of founders, just trying to get in front of the VCs and getting their attention. But at the same time, you guys are doing the same thing, right? You guys are trying to find the next big deal, and you guys are doing that sort of searching as much as the founders are as well.
Absolutely.
Something that we've talked a lot about is, how do you know that VC is the right funding source for you? So obviously it's very buzzy. There's a lot of tech companies. You kind of think VC when you think about getting funding, but there are a lot of options for outside capital. So how do you think about equity and when that's actually the right fit for your company as a founder?
Yeah, it's a really good question, and one that we find discussing with founders as we go, which is, and I think you'll be able to see, Patty shared with everyone some of our resources, and some of our resources, when should I raise, and then what type of capital should I raise? And that's all on our website, and we're very transparent about it, but we do spend a lot of time talking about it, which is VCs fund 0.25% of all the companies in the world. It's a very, very small amount. But then when you do look at the companies that were VC funded, like Facebook, Google, etc. You see that 75% of like the innovation comes from VC. So I can see why it's exciting, but most companies shouldn't be venture backed. Most companies can use other forms of equity, other forms of capital. If we're talking about non-equity and so non-dilutive funding, like grants, loans, etc. Companies that are doing services, companies that are not necessarily tech enabled. There's certainly different tools that you can use. But even if you do decide to raise equity capital, there's angel investing and there's venture capital. And I guess what we are talking about is if you are raising because you have found a channel of growth that works for you, and you just need to pour more fuel into that channel, then VC makes sense. But if you're just raising to test, to experiment, to explore, it doesn't really make sense. I think VCs want to see, okay, I've spoke with this amount of people. This is some hypothesis I've had. On a small scale, I've done this. This is what I got. If I'm going to put fire into this, I know it's going to go here. So that's kind of where VC makes sense. And when you think about angel investing versus venture capital, the expectations of return, the time for return, and the speed of growth is very different between kind of angel investing and then letting the company grow on kind of revenue versus what you expect once you commit yourself into venture capital. And there's other considerations like, you're not going to keep the ownership of the company. You're going to be reporting to other people. So think about how you like to work, who you like to work with, and where do you see this company going when you think about whether venture capital makes sense? And if you are going to equity, maybe angel investing and letting it grow in a different kind of sustainable path might make sense for you.
Yeah, that makes sense. I think it's not talked about enough that it's maybe not the right fit, and that's okay. But once you determine that it is a good fit and you're looking for funding from a VC, let's kind of shift to LACONIA. So maybe let's start with, you want to give an overview of the investment thesis and the fund formation, and then we can dive a little bit deeper.
Yes, definitely. So LACONIA, we are an early stage venture firm based here in New York City. We lead pre-seed and seed investments into B2B software companies that are changing the way business is done. We're currently investing out of our third fund. It's a 20 million fund. We're about halfway through the fund. So and we're targeting 20 investments. We've done 12 investments. That means we have 8 to 10 roughly to do over the next 2 years. Our check sizes ranges between 250 to $1 million with a sweet spot of 250 to 750. We can lead, co-lead, follow. We can do safe and price rounds. We don't have a specific ownership mandate, but typically our round sizes ranges between 1 to 3 million. So all this to say is that we can be flexible around kind of terms when we find the right type of company. Shall I tell a little bit about the team and our background?
Yeah, absolutely.
So I come from operations background, and what I get excited about the most at LACONIA is that the team by majority are all coming from operations background. So there's 4 of us on the team, all built and scaled companies. So we're kind of we're relatively to a seed firm, quite a high conviction firm. So for pre-seed and seed, to only be investing in 20 companies for the whole duration of the fund, which is about 4 years that 4 to 5 years you're investing out of the fund, that's kind of highly concentrated. But that is by design. So we have deliberately chosen to invest in less companies, but ensure that we're investing in what we call kind of solid businesses that we know are going to stay for the long run. So you could take an investment strategy that says, let's invest in 100 companies, knowing that 80% of them will fail and 20% will return the fund. And that could be your investment strategy. We are a small team, and deliberately we chose an investment strategy that means let's be highly concentrated, focus on just the 20 companies we think are here to stay and are showing solid business model, and invest just in those, and then go all in when we support them.
Yeah, that makes sense. And given the, smaller size of the companies that you have in your portfolio company, does that give you more, I guess, bandwidth to be involved in the companies? Talk about, once you have these portfolio companies, how LACONIA is helping to support them.
Yeah, definitely. I think that was also by design. By design, and this is not me designing it. LACONIA has been here for 15 years, and I joined about 10 months ago. But they've done a brilliant work in terms of deciding how they want to work with founders. So one decision was most of our LPs are high net worth individuals and family offices. So we don't have institutional investment, which meant that our size of the fund is smaller by design. So we make less investments. The one that we do, we call it high conviction, high touch. Coming from the operations background, there are three main pillars where we like to get involved with founders. One is sales accelerations. At the pre-seed and seed stage, you're kind of landing your first 10 customers. That is such a pivotal moment in the life cycle of the company. And all of us are coming from experience in marketing and sales. So being able to help around sales acceleration is definitely a core pillar of ours. Second is operational execution. So all the things that you need to think about as you're setting up your company for the first time. Pre-seed is really, really early. Are you thinking of all the functions, the HR, the partners? Are you thinking about everything you need to know around governance, communications, marketing? We do a 2-hour onboarding meeting with a very detailed onboarding document where we talk about all the things that you should be thinking about or maybe already thinking about and need some help with. And then the third pillar is what we call capital strategy. There's a valley of death between seed to Series A, and really for us, we're trying to help companies with hands-on support around making sure that you know what are the milestone needed for the next financing round for your company, and that you're setting the goals in order to achieve them. So it's really important for us to ensure that we help take the founders to the next financing round.
Yeah, it sounds like you guys are really there every step of the way to make sure that the companies are being thoughtful and strategic and heading in the right direction. Are there any themes or things that founders are consistently surprised by in that meeting of like, oh, I need to think about this and it hadn't even crossed my mind yet? Are there any kind of commonalities of things that are surprising to
Yeah,
founders?
that's a very good question. And actually, one of the questions that we ask to start that meeting is, what surprised you about the process with us, and what do we not know? So like it's kind of like the big reveal. What have you not told us during the due diligence process? Or you told us in a different way, and now you're willing to like share a little bit more, or what have we not asked? So that's definitely, we're curious about that. So we're also asking that. But I think founders, yeah, I think founders really appreciate. I mean, we provide folders of investor updates and how they should be formatted and templated, and how how an email should be sent to investors. And we have a repository of examples. And your board meeting deck, how should that look like? So I think definitely there's things that founders didn't think about. There's filing of tax that they need to do, and if they don't file a specific form and a personal tax, that could come in a lot of in a tax liability, from the company to their own personal. There's things like that, Swift account. There's things like that founders don't necessarily think. Social media and how they put themselves forward versus the company. There's definitely a lot of aha moments, but I think all in all, for what I've seen from the companies we've onboarded since I joined, is that people really appreciate the thoughtfulness that went into creating that document and thinking of all of that. And though it might look overwhelming, I think the best founders are the one that I see that they've already thought about this. They were just like, it was already in their head, but they just needed kind of a bit of tweaking, versus those that are like, whoa, I didn't know I'm going to need all of this,
Yeah, like having that framework is helpful.
Yes.
Yeah. And are there any areas, kind of on the same question of themes, like in due diligence, where you're really excited about a company and then you're like, oh, we just can't because of this thing? Are there things that you guys see, any themes there that the founders on the call may want to keep in mind?
In terms of things that we've discovered in due diligence that make us
Pause.
not continue kind of the due diligence process.
Yeah.
Interesting. So I guess maybe it will help if we'll talk a little bit about our investment strategy and what we look for in founders and companies, and then what could be like reasons to stop. So I can share a little bit about our process because I think it's a bit unique. So our due diligence process looks something like investment process looks like something like that. We have each one of the four of us on the team will have the first initial pitch meeting, which we can talk later about that. But it's a 30-minute call with each one of us where we try to get excited about the founder, the market, the problem that they're solving, their go-to-market strategy, the business model, trying to really, this is where we go through the deck and really trying to get like a high level directionally, is this something we're interested in? Now, normally next step from here with other funds is that you dive into the due diligence process, go into the data room and kind of start digging into financial models if you have and sales pipeline, etc. We actually find that taking the founder through a 1 to 3 week process of due diligence to get to the investment committee in the end, and to have one partner saying, I don't like this problem, I don't like this market, I'm not excited, we just wasted everyone's time for the past 3 weeks. So we flipped it on its head, and I should say LACONIA flipped it on its head. And the second stage after the first pitch meeting is actually coming to see the whole team. So this could be another stage where a deal could not proceed. But the idea is the founder comes in again from scratch, take us from the top without the person who saw them for the first time saying anything to anyone else. And then presenting to the team and getting everyone excited. Once everyone is on board, then we dive into the due diligence process, which normally takes anything between 1 to 3 weeks, depending on if we lead. And it includes looking at their pro forma P&L and their sales pipeline. We really are hyper-focused on how can this become a venture scale, right? Like, how are you going to acquire the customers? How are you going to acquire them fast? Is this a big problem? How big is the problem? Who cares about the problem? And will they stop everything that they do to pay for this problem? We really are looking for like big pain points. So here are things that could, make us stop due diligence in the process. And in the process, we also do introductions into prospective customers. So some VCs in the due diligence process might ask to speak to your current customers. We actually find that asking an early stage startup to give us the contact of their early customers who are already trusting an early stage startup and taking a chance on them in this pilot, it's a very delicate relationship. We actually rather not. What we do is we make a handful of introductions to prospective clients that fit the ideal customer profile of the founder within our network. And then this way we get an idea of what the value proposition is and whether it resonates with the ideal customer profile, but also hopefully whether if we invest or not, they now have introductions into potential prospective clients. So that is something that we do. So everywhere along the process, there could be reason that will make us kind of not want to make an investment. And we can talk about that a little bit more, but that's kind of the high level process.
Yeah, I love that. And I think it shows that you guys are adding value even before you've invested. It's like, hey, we don't need to talk to the people that have already shown that they're willing to take a bet and kind of go on this journey with you. Let's introduce you to some new people. It's obviously benefits you in that you get to see, can they, show the value to a new prospect, but you're also adding value to that founder by introducing them to a new lead. So I think that just speaks to, I think you guys really do, walk the walk of all the things that you talk about as a firm. So I think that's a very kind way of going through this process, which is fantastic. So you guys do pre-seed and seed. Talk to us about how you think about evaluating those different founders.
Yeah, definitely. So pre-seed is a term, and founders ask me that a lot. You say you do pre-seed. Can you tell me what that actually means? Pre-seed could really vary between one firm to another. It could be an idea in a pitch deck, which I've seen ideas and pitch decks and asking for 6 million raise. And I'm like, whoo, that's very bullish. But and it could be all the way to, I think some people are saying we want to see, some sort of revenue. There's some talks around like 10K MRR and things like that. But I think for us, pre-seed could be pre-revenue and or could be pre-product. normally it would be either pre-revenue or you at least have an MVP, but maybe you just have pilots and you're not bringing revenue, or you might be bringing revenue for pilots while you're building your product. But if we don't have a product and a revenue, which we've done those as well, we certainly will be looking for other signs of market validation. Have the founder thought through and showed us signs that this problem exists and the solution that they are building is the right solution, and that the people they are targeting would want to use it. I mean, to give you an example of an early pre-seed we've done, it was a founder who had an MVP and a pilot of 10K. And under surface, that sounds not a lot, but we still made the investment because it was an MVP of machine learning and AI when they just came out of a PhD in the field. And the 10K pilot was one of the top customers in the category that they are targeting. And that person, we're giving them 1 hour of their time per week to go through the pilot program. So for us, if you just look at the revenue or the MVP, you might say that they're not ready or it's not there. But for me, that's a hard sign of market validation, because the top customer in your category is spending time to solve this problem. To me, it shows that you found a problem that's worth solving, that if you solve could lead to a growth. There is a risk that the product won't work, but that's the business of pre-seed. And that's the bet that you as an investor take. But to me, that was hard signs of market validation. And then once you reach seed, you have a little bit more information. They have raised capital before, so you have previous investors that you can engage with. That could be, some companies do that as part of their due diligence process. You have a lot more tech that you can review. You have a sales process and a sales pipeline that might have grown already that you can kind of learn. There's a team, there's a little bit more information that you can kind of dive into. But really at seed, what you're trying to think is, okay, so at pre-seed, maybe there were a few customers and pilots, but do we see it's starting to kind of track a little bit more revenue, a little bit more recurring revenue? And is it starting to see, like, do we now have, like a few customers, 5, 10 customers? Have we started signing those customers and can see kind of a path to DA? That would be some of the things that we would look at.
Yeah, that makes sense. So pre-seed, it's almost like, is this a big enough problem and are you the person to solve it?
Yes, yes.
How do you kind of touched on this, but as a founder, I think what I hear a lot in pre-seed is so much of it is you're taking a bet on this founder. What are some traits that you look for in a founder that you sort of see, okay, this person's going to be successful, they have X, Y, Z?
Yeah, that's a very good question. And I'm happy that you're talking about traits and then not kind of signs, because this is where a lot of kind of the structural issues in this sector come about, right? At pre-seed, it is a lot about the founder. And we are looking for that founder market fit. And when we say it's about the founder, it's not, have they gone to an Ivy League, or do they look a certain way, or can we see their career progressing in a certain path? When we say a founder market fit, is we get excited when we see that founder that says, I spent 10 years in this industry. This is how I used to solve it in that company. This is the white space that we didn't solve for. I saw an issue. I went to speak to 50 people. Here's what I've discovered. Here's my hypothesis. Here's my early signs. This is why I'm building this company. Or they don't have to come from the industry, but they said, we've researched these 3 industries. I spoke to 500 people. This is the information I found. This is what I learned about the market. And this is where I want to pour money in to drive the growth. Those are the founders that we get excited about. So that kind of big understanding. We're a generalist fund, so people ask me, how do you know everything about the market? I don't know everything about the market. I'm looking for the founder who I can test their knowledge of the market and see what I think about that. I'll do my own research, but the founder are the people who are going to be the most knowledgeable about the market. So founder market fit, highly, highly important. And then there are traits. I mean, for us, we're looking for people who are coachable, humble, that we're asking ourselves, do we want to work for this person, or would we hire this person? Because that person's job will then need to build a team around them of really qualified people without a lot to offer to them, and they're going to need to get other investors to believe in them. So it's not like ability; it's more leadership, coachability, and people who are who we think are the type of people that we want to see on the journey.
Yeah, that makes sense. And you said something that sparked a topic that I know you're passionate about. We're all human and we all have implicit bias as human beings. And we're in a space. I know LACONIA has invested in a lot of founders that are typically underserved in the VC community, which is amazing. How do you sort of break into that space? If I know a lot of the deals that you guys are getting are from other VCs in your network, how does somebody that doesn't have that network today, but has a really great idea or a really, is an expert in something and has a lot of passion, what's some advice that you have to help sort of break those barriers and get around some of those implicit biases that just, they naturally exist? So how can we combat them?
Wow, such a big question. How much time do we have
I
left?
know, it's a whole nother webinar.
But yeah, it's a very good question, and I'm happy that we will touch on some of it. So I think, like you said, some of the issues are structural, and we all have bias. So we're thinking of how to de-bias the process on our end. And some of the things that we've done to de-bias the process is to have an inbound submission form. And we actually spend time reading the inbound submission form. I reply to every email, whether we want to take a meeting or not. And we've actually made an investment last year that came through an inbound submission form. So I think the question was, what tips do I have for founders? So we do the inbound submission forms, and there are companies out there who do that as well. So one of my recommendations would be, and on our website, we have a lot of information on the topic, which is the cold email guide, where we have a list of companies who are accepting cold emails and are kind of speaking about it. So I would definitely think about that, because as much as we are seeing other VCs, we do spend time looking at that and thinking, how can we increase our deal flow? We also have a venture cooperative of more than 1,000 fellows who kind of bring us deals from all around the world, from all around. So this is how we think about it. So we open the pipeline at the top as much as we can, and then we build a structural process as much as we can to try and de-bias in the process, which kind of having structure. So that's how we try to de-bias ourselves. But for founders, I would say, yes, so understand how the venture capital works and then figure out where you can slot in, right? So if you can target VCs that are accepting inbound forms and you fit their investment thesis, prioritize them. But also be aware that warm introductions do go a long way. So if you've done your list of potential investors, if you can find a way for someone to make an introduction, that will be very helpful. Or go meet that person where they are and introduce yourself in a way that will make sense. But I think understanding that this is how the process works, and there are some biases in it, and then thinking of how to de-risk yourself in it is really important. And then not getting discouraged by it is also really important, because I do see sometimes founders and they reach me, which I'm extremely open to things, but by the time they reach me, they might have been deflated, which is it's not their problem, but it's kind of like, think about, this is how it works. If this is really what you want to do, let's figure out a way to break it. But if we're fighting the fight, then we need to keep on going.
Yeah. I'm sure as a founder it's not easy to be
No.
out there. And I'm sure there are times when you just need a minute and you need to regroup, and we're all human, but trying to stay positive and staying really driven to the goal, I think is hard, but is really important. Every conversation is a new conversation, right? So trying to not take the baggage from some rejection to the next one, because you never know when that conversation will spark it. You may know somebody. If it's not you, you may have somebody that is a really good fit for them.
And I think we know that this is the structure. We know that this is how VC is right now. And if you're choosing to play this game right now, we have to play it and kind of tweak the rules, but we can't get frustrated by it, right? Like that's where we will lose the good people for the fight.
Yeah, 100%. Okay, switching gears, because I know that you guys have this open pipeline. You're having a ton of conversations all the time with founders. What are some of your pet peeves that you have when you have founders pitch you?
That's such a good question. And I will actually even say I'll take it to one step before the pitch. And there's, when we go to events and there's so many there, and you do see a VC there, and you want to make sure that you're kind of saying hello, and you should do that. One of the main thing I'll give as advice there is we are all at an event. We have so many people we're trying to talk to, right? Even myself, Mirit, I'm trying to speak to other VCs. I'm trying to see as many founders as possible. We try to make it as efficient as interaction as possible. What my biggest pet peeve is or you just got out of a panel and someone is coming to speak to you right at the end. My biggest pet peeve is someone coming in and then starting to take 5 minutes to just tell you the background story for the problem of what they're trying to solve. When there's like a line of people trying to speak to you or other people, and I think it just does disservice for the founder themselves. Whereas I think a better way would be to have a 30-second sentence that says, hey, you're Mirit from LACONIA. I've noticed that you do B2B investments and that you come from fintech. I'm currently building a business in fintech. Would love to tell you more about it. Can I get your email? What's the best way to get in touch? That's it. That's all I need to know at that level of conversation. And I think that will be my biggest advice, which is disclosing the right type of information at the right time. So at that event, disclose just enough. You're within my investment strategy. That's all I need to know. I had someone talking to me for like 10 minutes and I was like, wait, it sounds like you're building a B2C. He's like, yeah, I only invest in B2B. And he just wasted 10 minutes of his time. And now every conversation and every interaction could lead to something. But for me, if he didn't pre-qualify, I worry about kind of how he distills information. So anyway, so definitely share the right information at the right time. So at an event, share just enough so that we can see that it fits our investment strategy. And then we will book a meeting and would want to learn more. And in that first meeting, share what we need for that stage. I think Jeffrey calls about it. It's like our first date. You don't tell everything in the first date. And I think here the idea is to just keep it to the type of information we care about at this level, right? Why you? Why now? Why this problem? How big is this problem? And what traction can you show me of what you've built so far to kind of get me excited enough to want to move you to the next steps, if that makes sense.
Yeah, that makes total sense. I'm waiting for the book around like the dating coach and the VC to write a book together because I feel like every panel there's always some line about how well it's like dating, right? But it's very true. You're trying to find the right match and someone that's gonna be a good partner to you. So
for the next 7 to 10 years.
Right, exactly. Okay, so we know what doesn't work well. What are some, when you think about the actual pitches, like do you have an example of a pitch that stands out where you walked out and you were just like, wow, I need to invest in that company?
Yeah, definitely. There's an investment that we've done earlier this year, and the founder she just came to the pitch and you can see that she knows what she's talking about, right? Like your presence, how you show up is really important. She got on the call. She first wow us with why her. She was building in a space and show us why her experience is exactly what we need for this space. So she started off telling about how she's experienced and her team. She went on to talk about her problem, her solution. But I think what she did really well is if you know your business, you can already foresee what will be some questions that will be a concern for the person hearing it on the other side, right? For anyone who does sales, we know that, right? We need to know our product, but we also need to foresee any potential objections that might come and be able to kind of weave it into the story. She basically preempted all my questions. I don't even know how she did it, but she preempted all my questions because she was like, okay, this is a complex business to build. They're going to worry about this. So she kind of like, in her story already told us things that were concerned, but she kind of showed me that she thought about it and then presented it in the pitch to begin with, which I think was very comprehensive and a sign of her knowledge in the space, but also in fundraising.
Yeah, Yeah, I think that objection handling is fantastic. It almost eases your concerns, right? If they
Yeah.
know,
Instead
if
of it
they know,
becoming an objection, I didn't need to ask it as an objection. She kind of preempted it, and she's like, "Now I know that we're building in the AI space, and here are the mitigations I have around that." Or I know that going into payers takes time, so in the meantime, our process is to go here. So she had, and to me, that shows that they had a great handle on the business and their strategy.
yeah,
And that level of confidence and foresight is what gets you excited.
yeah, that makes a ton of sense. Um, Switching gears again a little bit, what do you think is the biggest misconception today about the VC space?
That it's the end goal of every business. Like I even see every business and every career. Like there are like posts out there about breaking into VC, right? There are panels about breaking into VC. There are panels about fundraising from VCs, and it's an I feel like it's an overhyped category. So I think that will be there are multiple paths for careers, and there's multiple paths to funding a business that are not necessarily VC. And to give you an example, and this is something that I hear our partners here talk about all the time, if you are a founder and you're building a great business that's generating 5 million in revenue and you end up selling it for 20 million and you own 60% of it, that's fantastic. That's a brilliant result. That's um that's that's 7 million to the bank, and by any standard, that would be a brilliant result for every founder on their journey. If you told me as a VC that I'll be investing in a business and within 3 years it will get sold to 20 million, I'll be crying my tears because the way that, and I feel that's the biggest misconception. Some people go into VC not knowing the fund mathematics. You need every investment, especially with a fund so highly concentrated like ours. You need every investment to be return the fund, which is a metric. It's a mathematic formula that every VC knows, which is we only have 5% in this company. So I need your company to exit at 600 million so that my 5% of your 600 million will return the fund that I need to return to my LPs, which is the 20 million. So you can see how easily a result that for a founder would have been fantastic is not fantastic for a VC. And that, I think, it's kind of the biggest pull, and you need to decide which path you wanna go.
Yeah, I think that's such a good point, and there's a level of growth that is required if you're going to get
Yes.
VC investment that is to a seemingly normal businesses seems crazy sometimes. You're like,
Yeah.
that's an insane growth
It
that I
needs
need
to
to
be
hit.
two to three X in the first 3 years. So it's like,
Yeah.
I think it's 3, 3, 3, 2, 2. That's like that like three times, three times, three times, two, two, 2 to 3X every year. That is a lot of growth. There are many fantastic businesses out there who have grown at a different pace and achieved a different result. A 20%, a 30%, a 50%, which is great. And achieved different results. There
Yeah.
are some businesses that do require that kind of fuel of money at the start in order to grow, and that's where VC makes sense, but it's not the majority of the business for sure.
Yeah, that's awesome. And I think it's good to talk about those things. I don't know that they're talked about enough. And what are you most excited about in this space? Is there a particular industry or a particular founder? What's kind of getting you excited at the moment?
Yeah. Yeah, so at LACONIA, we are sector agnostic. So we do look at a lot of things. But I think giving the background of our team, we have been kind of a bit more dominant in fintech, in healthcare, vertical SaaS, and some of our teams come from kind of e-commerce and retail. So we have done some e-commerce and retail enablement. So those are kind of big buckets that we normally focus on. I'm extremely excited about seeing where data in healthcare is taking us. There's not a lot of healthcare that we can do because we can't do medical devices, we can't do B2C, we can't do diagnostics, but there are enough business problems to solve in healthcare that in turn will increase patient results, that I would love to kind of get involved. But those are the buckets. So if you're a founder building in any of those buckets, we have a pitch form here, and there's how to get in touch with us, and we'd love to meet you.
Amazing. And I know we're almost wrapping up on time. I want to answer questions from the group if there are any. But I mean, it's a simple question, but what piece of advice would you give? It's general, but to folks on the line that are building and trying to go out and raise capital, what's your piece of advice that you'd give to them?
Oh, wow. I think, first of all, be methodical about the process. It's a hard process, and it's a sales process. There needs to be a funnel. You need to be progressing in the funnel. So I think be methodical about how you run the process. And then think of who are the partners you want. Think of why this problem, and then why these investors fit what you're trying to do. And don't get discouraged, because you're doing the hard work. You're building the product, you're building the team. If you believe in what you do, just go out there and find those that what you say resonate with that.
Yeah, I love that. That's great. Okay, cool. Let's see if there's any questions that we can answer from the group. So here I see one. Do you consider companies outside of the New York area?
Yes. We invest in all of the US and Canada as well. For us, the question is whether they operate in a market that we can make introductions to, because we like to use our network. So we could, in theory, invest in a startup in Europe, but as long as their market is here in the US. So North America is our market, and our connections are in the East Coast, Boston, New York, etc. So we have a bit more there, but we invest across the north of the US.
Awesome. Okay, we have another question. Is qualified small business stock an important characteristic LACONIA looks for?
Qualified.
Is QSBS an important characteristic?
Interesting. I don't think I know what that is, so I'll get back to you about it. Well,
we can follow up with that one.
Yes, maybe it's not that important, but
Right.
maybe they can clarify what they mean.
Yeah, James, if you want to add some clarity, we can try to answer that question.
Yeah.
Okay, we have a question around your diligence process. If they're interested, timeline, and other things you may ask. I mean, I know we spoke briefly about this, and your website actually is a really awesome. I'd recommend everyone check out that website. But I don't know if you want to quickly touch again on the diligence process, and when had some questions around timeline and maybe some questions that they can expect during that process.
Yeah. So I think timeline is anything between 1 to 3 weeks, depending on whether we lead or not. And then I think the type of things that once we dive into the diligence, we look into kind of stage 1 is market assessment, and that's where we're going to look into perform a P&L, your go-to-market strategy, sales pipeline. So it's not what sales you necessarily have, but I want to see, like, there's 10,000 companies in this space. Here are the ones that I want to focus on, etc. So that's a kind of market assessment and information. Then we dive into potential prospective clients introductions, and then we might also do technical architecture diligence. And then at the end, there might be kind of last reference calls with maybe existing investors, if you might have. And other references we might want to do as a reference check. Previous employees that maybe have left, depending. We're so early stage, but we might have that.
Awesome. Thank you. Another question here is cyber tech and cyber insurance in your areas of interest?
Is cyber definitely falls. I think I see a question if hardware is. So hardware, we just do B2B software. So strictly B2B software. And then on the cybersecurity, yes, certainly falls under our interest. We have made an investment in this space. I think in general, because we're a generalist fund, whenever it goes to area of specification, like healthcare, like cyber, like fintech, we need to kind of test whether the product is too tech in that field, or is it general enough for us to be able to underwrite it? Because we will have experts in cyber that will help us underwrite the investment, but we also need to to gain a level of understanding in order to kind of underwrite the product.
Great. That's a great question. Mirit, with such a small and efficient team at LACONIA, how do you divide up the work and focus areas?
Good question. And we just did an Ask Me Anything session. By the way, have a look at our website. We do sessions where LACONIA team, the four of us, get on a call and we do Ask Me Anything. And the topic today was time efficiency and how do we divide our time. So I think we try and, it is a small and efficient team, but we do also have a smaller portfolio. We have about 35 companies in our portfolio, and we try and bucket our activities between majority of the time investment. So whether it's deal sourcing and due diligence. And then obviously there's fundraising. We're fundraising too. So being able to fundraise from LPs and LP management is another bucket of time. And then we also have portfolio support. So supporting the portfolios, joining on the quarterly or monthly meeting. And then of course the in-between help that you need. And then there's also kind of just running the fund, the back office and tools and everything that we do, hiring. We're in the process of hiring a digital marketing freelancer. So there's things around like running a team. So those are the biggest buckets. And we do try and kind of spend a lot of time on sourcing because that's where majority of what we do.
Awesome. There's a question here. Do you think there's going to be a change in the landscape for female founders to receive more VC funding?
I am very hopeful that there will be a change, and I'm working very hard on it. I think it's a big topic that we won't have time to cover now, but there's definitely structural change that needs to happen, and then tactical things that needs to happen. So I think certainly if we can ensure that we increase top of funnel, and be very intentional about it, and I'm very intentional about it. If I go to an event and I don't feel that there was a good enough representation at the top of funnel for the people that were at the event, I tell the event organizers, like, if this is a pitch competition and there's 8 founders presenting here, I don't want to just see 2 women, not to mention none. And I think that's definitely an area that we can think about, which is how do we increase pipeline at the top of funnel? How do we increase more female check writers as well? Which unfortunately, the correlation between an increase in female check writers and the increase in female founders hasn't yet happened, but that's because there are structural things that need to change. The flow of money needs to change, so there's a lot of work to be done there. But definitely, I think if you're an underrepresented founder out there, make sure that you find those communities where your underrepresentativeness is not seen as a minus, but a massive, massive plus, right? Like there are massive pain points that we're uncovering that the majority of the people who make up the founders right now have tried not solving. So, it's uncovering overlooked problems, uncovering overlooked communities of customers, etc. And I think that's everything that we do in venture capital, right? It's like overlooked markets, overlooked people, overlooked consumers, overlooked founders. It's where the alpha is. So I think you should be looking at everything and make sure you're not missing anything. So I'm hoping the more people understand that it's not just the right thing to do, it's also makes sense for the end returns, and there's ample amount of research on that as well. I'm hoping that will drive change, not just for women, but for underrepresented founders as a whole.
Yeah, it's good business.
Yes. Yes.
100%. Do you invest in safes is a question that we have here.
Yeah, we do safe price rounds. Yes. No any kind of technical limitations on how we invest.
Awesome. All right, guys, we are wrapping up on time. If anyone has any final questions for Mirit, feel free to throw them in the chat. But Mirit, thank you so much for your time. This was incredible. I hope everybody on the call found it helpful and got some good insight, a little peek behind the curtain with what Mirit is working on. I know LACONIA has a ton of amazing resources on their website as well. You guys are hosting a lot of these types of sessions. So if you guys enjoyed this and want more opportunities to ask your questions, they're definitely out there. Oh, another one, LLC structure okay, or just C Corps?
LLC structure is okay as well. Yeah.
Well, a lot of flexibility.
Yes. And And thank you all for joining. If you have any more questions, my email is there. Feel free to, either email me your deck or apply through our pitch form, which is on our website. We review all of them. And we do have a lot of information around what type of investments we're looking, which founders we're looking for. So, and also other resources that should help with the fundraising. How should I raise? When should I raise? Who should I go to? All of that is on the website. The team has done incredible work to build it.
Amazing. Well, thank you so much. And thank you to Trinet and DECKO as well for partnering with us on this event. And we look forward to the next one. Thanks, everybody.
Thank you, Marley.
Bye.